I'm surprised how many clients that we bring on that aren't familiar with this topic, but it's something that really adds value and can really add to your overall return, as well as minimize some of the taxes that you're paying. Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Mark, during this uncertain time that we're living through in this country, there are certain financial terms you might be hearing a lot and might not completely understand. So we have some terms that you should know during the pandemic. So the coronavirus pandemic has likely led a lot of folks to hearing a lot more financial buzzwords. And it's possible that some folks aren't familiar with some of the terms that are getting thrown around. So let's take a look at some of those, and you can explain. Recession and depression. And what are those terms all about? What's the difference, Mark?
Sure. I mean, in simple terms, a recession is an economic decline that lasts at least 6 months. A depression, which is a lot longer, is a lot more severe, and that can last for several years. So it just depends. But basically, that's the difference. Recession, think of 6 months, depression, years. So depressions are worse than recessions.
We're hearing a lot about both of those these days, and it's like the people talking about them don't really know what to call the situation.
Well, it depends on how long this lasts and what we're in it for and things like that, and how long it stays down and versus not coming back up. And with all the volatility, we see it down one day and then up one day. So, how do those offset each other? That sort of thing. It's not down every day, like in certain circumstances we've had.
Another one I've been hearing a lot lately is VIX, V-I-X. Explain that one if you would.
So the VIX is basically a market indicator which measures the volatility of the market. So a lot of people look at the volatility based on the VIX. We obviously know there's a lot of volatility, and a lot of people that look at the VIX are a lot of analysts, those sort of things. You have a lot of day traders that look at that because if you're a day trader, you don't really care if the market goes up or down. You just want it to move one way or the other to make money. So for day traders, that's an important thing to do. For investors like us, volatility is important, but we obviously want the market to go up over time versus down over time. And we don't make money on volatility. What we make money on is the market going up. So the volatility going up, not going down.
A lot of terms that we're hearing these days as people talk about the financial situation and what's going on with the markets and everything else, and a lot of uncertainty out there. And this is really an odd time. I understand that you have put together a video that is very helpful for folks to understand this situation a lot better.
That's correct, Ron. We put a short video together about the coronavirus. And so we're happy to share that with anybody that's interested. You just go to our website, which, Ron, you can give that out. There's no cost. There's no obligation. It's like a 3-minute video, but I think it's important, and I think it'll give people some clarification and it's helpful.
Well, watch this video, and it will explain a lot. I think you'll get a lot out of it. And you can find it at savingwithsilverman.com. That is savingwithsilverman.com, Mark Silverman's website for Silverman & Associates. We're talking about terms that we all need to understand during this time of the coronavirus, financial terms that we should know. And we've talked about recession, depression, and VIX. And another one that's being thrown around a lot is tax loss harvesting. What exactly is that?
Well, that's a good one, Ron. Basically what it is, it's how you manage money outside of retirement accounts. So if you have money that's like in a joint account or individual account or a brokerage account, after tax money, so it's not your IRA, your 401k, et cetera, where you have long-term capital gains and short-term capital gains and losses, et cetera, what it is, it's managing money while trying to take losses while still trying to grow the account. So it's managing the money in a tax efficient manner. What a lot of firms, advisors, or individuals do is they manage money the same, whether it's an IRA or non-IRA account. And there's a big mistake in that because the tax consequences are different. When you take money out of a taxable account, you're just paying, you've already paid taxes on that money. So you're just paying, short-term or long-term capital gains or losses on that money versus money coming out of a retirement account, for example, is taxed as ordinary income. So there's a difference. And a lot of this volatility, the one good thing with this volatility, if we can talk about it, is we can harvest those losses to offset the gains in the future. So say the markets continue to maybe go up from here, where we've had some losses at the beginning of the year. We're able to harvest those losses to offset the gains going forward. One way to do it is to think about, let's say you own Coca-Cola. We like the stock Coca-Cola, but we decide that there's a week we can take a loss because the markets went down, but we do like that sector. Mm-hmm. Let's say we buy Pepsi instead.
Right.
So we buy Pepsi because you can't sell something and buy something. There's a wash rule. So you can't own it for 30 days. You have to wait 30 days. Let's say we sell Coke, take the loss, and then buy Pepsi, which is very similar. And we're still invested in that without having to worry about those wash sale rules. So that's in simplistic terms of what it is. But we're able, the way that we manage money for our clients, to be very good at tax loss harvesting, which I'm surprised how many clients that we bring on that aren't familiar with this topic, but it's something that really adds value and can really add to your overall return, as well as minimize some of the taxes that you're paying.
Okay, let me ask you about index funds. Did they help people avoid problems in the market downturn?
Indexing is important, and we do quite a bit of it here. It doesn't make you avoid. You're still invested in the market. And typically when we have a severe decline in the market like we have seen, it doesn't matter what you own. A lot of things, most things I should say, are going to go down. So whether you're an index fund or not index fund, the markets go down, the markets go down. So it doesn't help you avoid, but it does give you some good diversification. So we are big fans of indexing when it comes to investing.
You're listening to Saving with Silverman with the one and only Mark Silverman, and hope you're having a good day today in Arizona, wherever you are. Next one here I wanted to ask you about, Mark, is rebalancing. Explain what that is, how often you should do it, and are you doing it for your clients?
The answer is yes, we are doing it. How often you should do it, that depends. We do it on a consistent basis, but I would say at a minimum, you should be rebalancing once a year, and probably even more than that when we've had this type of volatility. But for those of you that don't know what rebalancing is, let's say that we've determined that you should be at a 60-40 mix, which is kind of a standard balanced moderate investor, which is 60% stocks, 40% bonds. Well, as we know, stocks and bonds move differently. So maybe after 6 months or a year, let's say a year's time, the markets have done well, the stock markets have done well. So now you have 70% in stocks and 30% in bonds. So what you need to do is rebalance that. You sell that 10% piece off in stocks to add it back to the bonds to keep that model the same. It gets very tricky these days with all this volatility because, how often do you do it with the big upswings and downswings that we've seen in the markets? You could constantly be rebalancing. So you need to have a strategy or work with someone that's got a strategy that knows when to do it to keep it tax efficient, keep, trading costs down, et cetera, et cetera. But it is important to rebalance. If you are doing it yourself, you should at least be doing it a minimum of once a year, and with all this volatility, probably even more than that.
So much uncertainty out there and so much volatility involved, and this is a mighty good time, I would think, for folks to get a second opinion on whatever their plan happens to be. If they do have a plan, maybe even working with another advisor, it's time for a second opinion on all of those matters.
Yeah, what we found, Ron, is a lot of people who are working with advisors haven't heard from their advisor through this whole coronavirus, which is really upsetting and unbelievable. But having done this for over 25 years, I get it. A lot of advisors like to hide under their desk when the market's going down, which, as I tell people, I feel clients need us more during downtimes than they do uptimes. When the markets are doing well, clients don't need us as much as they do when things are not going as well. And that's unfortunate. So what we're trying to do is offer our second opinion service to anybody that's interested. It's done with a phone call, so you don't have to worry about anything there. If we do decide to take it further than that, we do have the ability to do Zoom calls with our clients to keep everybody safe. So it's something that we're happy to offer anybody, and I'll let you give the information, Ron.
You've been listening to the Saving with Silverman podcast. If you have any questions at all about your financial situation, please give Mark Silverman a call. Again, his number is 520-333-7601, or go online to savingwithsilverman.com. For Mark Silverman, I'm Ron Stutz. We'll see you next time on the Saving with Silverman podcast.
The Saving with Silverman podcast is brought to you by Silverman & Associates Wealth Management, LLC, based in Tucson, Arizona. The show is available on Apple Podcasts, Spotify, Google Podcasts, and everywhere you listen to shows. Subscribe to the show on your favorite app today and never miss an episode. Just search for Saving with Silverman to find us, or visit savingwithsilverman.com to listen to past episodes, to contact Mark, and to learn more about how to make smarter decisions with your money.
Did you know that Mark Silverman also has a radio show? Tune in to Saving with Silverman Saturdays and Sundays at 3 p.m. on AM 790 KNST.
All matters discussed on this show are for informational purposes only. Opinions expressed are solely those of Silverman & Associates Wealth Management, LLC and staff. All topics covered are believed to be from reliable sources. However, Silverman & Associates Wealth Management, LLC makes no representation as to its accuracy or completeness. The show shall in no way be construed as a solicitation to sell securities or investment advisory services to residents of any state other than Arizona or where otherwise permitted. Topics should be discussed with your individual advisor prior to implementation. Fee-based financial planning and investment advisory services offered through Silverman & Associates Wealth Management, LLC, a registered investment advisor in the state of Arizona. Insurance products and services are offered through Silverman & Associates, an affiliated company. The coronavirus has sent shockwaves around the globe, throwing the financial world into turmoil and causing volatility in stock markets. You're being urged not to panic, but many are wondering what effects the coronavirus will have on their finances. Millions are facing uncertainty about their job, monthly income, daily expenses, debts, retirement, and savings. Today, many investors don't have a plan, and many others no longer have the right plan. If you're concerned about the impact the coronavirus is having on your savings, investments, and retirement plans, receiving a complimentary second opinion is not only prudent, it's just plain common sense. For the first time ever, Silverman & Associates is making our complimentary second opinion service available to individuals other than our clients. There is no cost and no obligation. To receive a complimentary second opinion on your family's finances, call or text us at 520-333-7601 or visit savingwithsilverman.com to learn more. That's 520-333-7601 or savingwithsilverman.com.